Canadians are more pessimistic about their current debt situation than they were a year ago. That's according to a new survey from insolvency firm MNP. It found that more than 3 in 5 Canadians are concerned about their ability to repay their debts, and almost half regret the amount of debt they've taken on. It comes as Canadians continue to navigate the full effect of higher interest rates coupled with still elevated inflation. Let's get more perspective with personal finance expert Barry Choi. Barry, thanks so much for joining us this afternoon. Not exactly a happy topic to be talking about for a lot of people when they're talking about their debt or thinking about their debt. It's something that could be hanging over them, leading to, stress, anxiety, all sorts of things, according to this survey. What do you make of the, current situation that a lot of Canadians are finding themselves in?
It is a difficult place to be in. That recent survey data was very interesting because it just adds on to previous data that we're seeing. I remember leading into the Christmas season, we're seeing reports that Canadians are saying that they're going to take longer to repay their holiday debt, which is interesting because they know it's going to take longer, but they're still taking on debt. And this data just adds to the fact that since 2008 and 2009, Canadian debt levels have constantly just been increasing. But now that we've actually seen an increase in inflation rates as well as interest rates, I think Canadians are finally realized that the party has ended and they are no longer able to get cheap debt. And now it might be time to pay things back.
Yeah, okay, so the party has ended, the holidays have ended, maybe the holiday spending has ended too, Barry. I kind of think this time of the year about sort of doing a check-in on my finances, taking a look at what I'm spending money on, what might have creeped in over the year as well. Some of those, monthly payments and stuff that you sign up for, maybe it's an app or something along those lines. Are there, is there advice that you would have for people when they're kind of taking stock of where things are at right now? If they do have debt hanging over them that they're concerned about, maybe they have to renew their mortgage this year. Are there some small changes that might have a big impact when they all add up?
You know what, you talked about quite a few things there, and I love it. But, let's talk about one thing first, that financial checkup, which we need to do in January, right? Everyone needs to do it. So whether that be how much debt they currently owe, what their net worth is. But at the same time, it's very similar to that other famous New Year's resolution where it's like, I'm going to get in shape, I'm going to eat better. But come February, everyone forgets about that and they've just gone back to their old ways. But as far as actual tips are concerned on how to get things in control, I would say the first thing to do is literally physically write out a list of the debt that you owe so you can visualize things. And then you want to focus on the things that are costing the most. In most cases, it's high interest debt, such as credit cards, because it costs you, 20% plus interest. If you can focus on that first, in the long term, you'll pay less interest. But other small things, you had mentioned cutting back on certain things. We often joke as personal finance experts, get rid of Netflix, get rid of Disney Plus, and make things go away. It's not that simple. Just looking at my own finances, I can't believe how many subscription services I have just for regular software magazines. So yes, it's time to look at that budget and just to see what things can be cut. And I don't want to pop on to say adjust your budget, but it's a good place to start.
Yeah, and it is tricky, too, when you're thinking about some of those expenses like Netflix or Disney Plus. If you talk to some parents, the payoff, the value of those services can be very high and very worth it when you're thinking maybe I'm paying for this, but I'm not paying for, taking everyone to the movies that could cost a lot more. So maybe it actually does make more sense for them financially. But I mean, really, when you're talking about debt and talking about the stress that people are feeling, it's something bigger than, a $15 a month is going to kind of help you with. When you're looking at some of that high interest debt, do you have strategies there? Is it worth exploring, bringing that debt together in some way, Barry?
Yeah, definitely. One of the easiest ways to get your debt under control, especially high interest debt, is to check with your financial institution to see if they'll approve you for a personal line of credit. In most cases, that's about half the interest rate as a credit card, right? So once you're approved for that line of credit, you would pay off all your high interest debt, and you'd focus just on that line of credit. The downside here is it is another form of credit. And quite often what people do is they think to themselves, oh, I've got extra money, I could spend more. Right. So that actually increases things. So you really got to pay attention to what you're using and just realize that you got to stay on track if you want to pay down your debt.